Welcome, all subscribers worldwide, to tonight's Nightly Market Intelligence Report. My name is Jeff Killian. I am the Chief Market Strategist here at the Inside Technician and the creator of the Nightly Market Intelligence Report. We have a lot of new subscribers who've come on board recently in the past week. And we thank you for the emails, for the positive comments regarding this report. We do realize that it is a necessity to deliver over the information to you as traders and investors in a fully transparent way, a fully disclosed manner, so that you have the ability to see where prices are trading and where they can trade within the next few trading periods. What we do offer is expert market timing in the form of real actionable intelligence that we use every single day here on this report to be able to discern where we are, where we really stand within the U.S. markets every day, and how we can capitalize on making the necessary trades that come to us in the form of what we entitle true high probability trades to be able to outperform the markets and by a wide margin. Tonight, with our smart money bias market trading call, to begin with, as always, we have a short level 8. Now, this continues to stay at a level 8 because we do not believe at this time, just because the market has traded down so far so fast with all these down closes and has literally blown through all the levels that we previously laid out, that this is over. We believe that this can continue to the downside based on what our analysis is tonight. Our conclusions are that the market will continue to trade down, again, based on what we're seeing tonight. The smart money that sold off here clearly was the fire for the sell-off that has brought us down to the close today on the Dow at 15,133.14. We have a lot of levels that have been changed tonight, so pay special attention to the levels on the Dow and the S&P 500 E-mini futures. These levels are critical to be able to use them as price profit targets to the downside on a daily basis. Support resistance levels here. We have brand new levels here laid out. When we have an uptrend of this magnitude and in a downtrend of this magnitude, taking back almost 3/4 of the firsts to here, but second and third leg for the blow-off, the levels that were once used here to broadcast out into the future are now eliminated, and we go with the most recent prices leading into the future, the hard right edge. So the changes for tonight are, respectively speaking, going across all of them here, a few here, but as we look at the resistance, the higher area of this on the Dow index right now is 15,000, and that's 339.02. To the downside, right after that, as a new level laid out tonight here as well, is 15,249.82. And right here, what we had previously still stands at 15,194.13 on resistance, because we now have 3 closes below that level, even though it was so close right here. Support to the downside remains at 15,067.23 and here at 14,927.19. This is a brand new level that I have included in the report tonight, where the low has already punched through 15,067 and 23 right here. Those are the absolute levels on the Dow index. Now let's take a look at the indicators, and you'll see why we have the conclusion that we have based on the current market conditions. More momentum to the downside here on the Stochastics Momentum Index, not looking back. Here, if we look at the longer-term relative comparison of the prices to the indicator, very little upside momentum here out of the Chaikin money flow longer-term indicator as compared to the onslaught of the sell-off to the downside that has taken place within the last 8 sessions. Here, more disparity between the EMAs to the downside. Here, look at the straight sell-off on the short-term money flow index. My chief smart money tracker this is a clear indication that the smart money is continuing to sell off. This is in fact what we consider to be, from a trading professional standpoint, is a controlled market sell-off. This is not a panic sell-off. A lot of confusion like here, and then an extreme sell-off in a short period of time. Things are very, very controlled on the way down. Here we have more disparity between the MACD indicator and the signal line, indicating that this strength of this trend continues to be strong to the downside. Very little up movement here on the advanced decline oscillator, and that gets us right back to the levels. And there they are one more time. Let's talk about the sectors from the S&P 1500 organized database specific to us here at the Inside Technician, and the most highly correlated price movement ETFs that can be traded against them. Here we are in a situation where we have a data problem right now, so we're going to get back to that in a minute, and let's see what we can do to close that out and reopen it up in just a moment. Okay, we have the information up on 40 financials and the ETF symbol XLF, using this sector as a proxy to analyze and determine where the real trading opportunities are on the ETFs against the sectors that are organized here with, again, within the S&P 1500 10 sectors that we cover. We are still at this time, we're staying short tonight with a well-placed stop right under the prices here. Again, getting through these very quickly tonight. Here on 10 Energy and the ETF symbol XLE, smart money bias call will be out if prices trade up even marginally tomorrow to get through this area where we went short. We don't want to give a lot back, so that could possibly be a break-even trade or possibly a loser with a point or two, but nothing compared to the runs that we have on the high probability trade side. It's always best to mitigate the risk. If the trade goes against you, you get out of it where you're stopped. It's placed, no questions asked. It's nothing personal. It's just business, and we let these winners ride. Here we have no smart money call tonight on 25 consumer discretionary in the ETF symbol XLY after getting out just the other day. And here on 35 healthcare and XLV for 10/2/2013, again, we have no smart money bias call here tonight. And here, interestingly enough, 55 utilities and XLU, we have no call tonight. This is extremely interesting to me because these prices have sustained a certain level with a lot of positive relative strength as compared to the market completely falling off. This means that if the market cuts us a break, utilities could be found as defensive in nature and trade up sharply, and we are prepared for taking advantage of that move. 45 Infotech and XLK, we have no call tonight here because of the high volatility. We took a short and got out just the other night with a 3-point loss right here, turned right back around and went against us. And here, excellent trade, short here back on 920 for that report. And today, the probe suggests lower price movement and a down close at 432.92. Nice trade in play. And because of it, we have a possible out on the AM session if it trades up sharply, but we are still short. And here, 50 materials and XLB, we're going to be out of this at tomorrow's prices. They trade right up, no questions asked. 50 telecom and XTL, we are staying short tonight here. 20 industrials, very interesting trade. Has not tanked like the market has. It has considerable relative strength as compared to the market. We are still short, staying short tonight on this and XLI, which brings us right back to financials. And let's talk about the futures. Looking at the near month, December 2013, some of these levels have changed as well, so let's pay attention to these tonight. For those of you that are fast forwarding, as always, here we are with a remaining short level 6 in the smart money bias market trading call. Now, as we look at these levels, the chart pattern is considerably different. Gap up, gap down, and because of the current configuration and the trend turning back around to a certain degree, like the Dow. The levels are now taken from different areas and broadcasted out onto the hard right edge. The highest resistance level is 1706.50 right here next to the downside, 1694.50. By this price right here, the third to the downside at resistance is 1691.50 and support at 1678.25, and then secondary support by this bar broadcasted out where the low almost hit right here 4 sessions ago is 1664.75. We are open with a new overnight session. Prices open and are trading down 1679. Now, as we get into the indicators, it's clear to see downward momentum from the Stochastics Momentum Index. Here, looking to see how we're going to get out of this pattern right here that I have specifically drawn in just tonight, a brand new pattern from the Chicken Money Flow longer term smart money tracker to determine where the prices have a higher probability of going very shortly. Again, MACD still negative to the downside. And here, look at the short-term money flow continuing to fall off to the downside. This is why we are still at an 8, and we're looking for the majority of the downside trades in real time to pick up again the lion's share of money, cash, in our trading counts in a short period of time. Now, in the case where we have overnight sessions, they do not trade, the moves do not trade as fast because of the lack of participation. It's not a liquidity issue. It's a lack of participation of the size of the contracts that are traded within the overnight session. Therefore, we do have extended hold times, and I've gotten a lot of emails that have come in many times on, the extended hold times that we have in the overnight session when we have extreme circumstances, and that's exactly the answer why. Because if I believe, based on this smart money trading methodology's determination, that the prices can trade down significantly, it doesn't matter if it takes a few hours to get there. As long as they keep moving in the correct direction, whether short or long, in this case short, there's no reason to get out of the trade. MECD on a 15-minute chart still had a lot of distance to go to get completely bottomed out, referencing the last 5 trading days. And so at this point, looking at a beautiful setup on the 15-minute charts as we go through this, we have 2 different levels. The lower one is 1687 right here that needed to be penetrated when all the indicators were in the proper position, firing to take a short trade. Here we are again, MACD, 1687, Money Flow Index, EMA, 1687, clear to trade short, Stochastics Momentum Index, clear to trade short, although at the lower region of its subgraph. And as we go back and we look at where the area gets penetrated, it wasn't until this time right here at 112 when I got called by a partner that there was 912 contracts traded. I never saw that back before. Did you? Not until here. Not until the blow off at the upside. And this was the reason to get up, do the analysis like we will in the Maverick trading room that will be open by January 15, 2014 to alert all subscribers for all the moves that are imminent in the form of high probability trades to be taken and hit these price profit targets to the downside. Here, shortly after that, when this additional volume came in right here, was where I was in. That time was right here at 1:18 a.m. for 20 contracts. 20 contracts were traded because of the overnight session, and here we are in a situation where there was no need to ever consider getting out of the trade, even though the extended hold time was there. Here's a longer-term price profit target. No real volume at this point of this nature to stop prices. Therefore, the trade was still held. When we got through a resistance level at this point, at 4:05 a.m. at 1678.50, it was time to get out of that trade because the violation was clear that, from my perspective, no more opportunity for now. So at the end of it all, we picked up one of the best trades we've had in a long, long time. The most amount of points gained in a long, long time. And why? Because the market is in a major, major sell-off and continues to appear to be so for some time. And this is the reason why we picked the best of the best trades. And here's the demonstration for tonight. The gain in the trade is 7.5 points times 20 lots for a net dollar gain on the trade of $7,500 US. Tomorrow is Thursday, and this will be the last report of this week on tomorrow's trading. We do have a situation where we have the ability to continue to trade to the downside. Let's keep our stops close above prices in case things turn back around here for an ETF trader, market mirror fund trader, and consider the possibilities of another leg to the downside in the very near term future. This is the way it looks tonight. We'll see you again, everyone, tomorrow night on the next report.